where we are right now, relative to this thing called the power trend, which is how cities grow, networks grow. The power law is a more sustainable trend. And if you look at the bands or the gradations of risk, we're at the low end. If you accept that Bitcoin is on a power curve, then 90% of the observations that we have seen are higher than we are at relative levels. So relative levels, we are extremely cheap. And so that's a great opportunity. There's a lot of things you could do. Never financial advice, right? But you can really find comfort in that if you just sort of forget all the noise, all the trading view, the YouTube thumbnails, and you just look at this chart and try to understand what it means.
Matthew Mezinskis, what's up, man? Last time we talked was the end of October 2025. Bitcoin's price was 50% higher than it was today. A lot of leverage got wiped. That was probably a catalyst for lower prices. The 4-year cycle narrative became a bit of reality and self-fulfilling. So, we've got cycles to talk about, power law, Kevin Warsh, institutional adoption. Where do we start today? Maybe you can give a refresher for our audience and for those who maybe didn't catch you last time on the pod. What you do, all your cool charts, power law, monetary base, and all that. Take the wheel, my man.
Sure, Tyler. Yeah, thanks for having me back. Never a dull moment in the Bitcoin space. So that's pretty much what I've been doing most days for the last couple of years, is just streaming now on this kind of ever-evolving little chart engine that I like to do. We were just talking pre-show how Claude can take you to the next level there. But have a podcast. I've been in space for many, many years now. And one of the things that I've tracked two of the things, I guess, since 2018 has been one, how central bank money has grown. And central bank money is defined as the monetary base, which is basically like the balance sheet of each central bank in the world, and trying to track that and map that relative to the growth of Bitcoin. And that's been quite interesting to track over the years, especially as it relates to, the haters that don't believe Bitcoin is money or even don't understand what real money should do, or don't understand what government money actually looks like versus say deposits that people use every day. So just trying to track through a lot of that cruft online and then put it together in a somewhat digestible form. So that's what I like to do. Been doing that for a long time. And then also since about 2018 as well, recognized that Bitcoin was on this power trend, which is, I think, still probably the best way to map the growth of Bitcoin. I'm not the world's best marketer, but actually was doing the power law relationship of how Bitcoin's growing as a network a couple months even before Plan B released his little stock to flow model, which also happens to be a power law, except he's using exponential coefficients, which we could talk about if you want. But so it's a little bit of a confused model, but it is actually a power law on the stock to flow is what he uses, but it's slightly wrong because he's modeling it after exponential assets like gold and silver, and Bitcoin doesn't do that. So anyway, these are two things that I sort of try to anchor my views toward and help people not have too many Malox moments to the extent that I can. And like you said, a lot has happened. The four-year cycle still is kind of valid, as I would say. Although I think that could change by the end of the year based on the trends, but we'll have to see.
Yeah. So let's dig in. Let's dig into the power law chart here. Like a lot of talk in the space is how we got a lot more dampened cycle this time around. We didn't reach those, 90% bands or anything like that with Bitcoin's price. When Bitcoin's price was ripping in the summer, fall, a lot of major catalysts were happening. Institutional adoption. You had the ETFs. You had Michael Saylor buying Bitcoin like a drunken sailor, and he still is, of course. Why do you think we didn't have the tops? Is this just a natural evolution in the power law model and the price action of Bitcoin? How do you think about that adoption, and what's the model informing you now, Matt?
Yeah, yeah, good questions. I think history never repeats, right? But it does rhyme, and myself included. I fully expected to have some sort of a blow off uh, in the fall because we've had that, on that 4 year anniversary, that odd year in the fall and fall into the winter, and we didn't have it. But I think that due to the nature of Bitcoin's adoption, which we can think of like the power law is representing, because the power law is very interesting, just bottom line, and I can even explain it for those that are watching this as well. But this is a chart of Bitcoin's price, which most people know. It's got that kind of like that little parabola there. That's that sort of gently sloping curve, a little bit steeper at the beginning, then sort of mellows out. This is a log linear chart, and if I was looking at any other asset uh, in the world, like stocks or bond yields, or looking at stock market indices, a log linear relationship would be a straight line, exponential. And I think this confuses a lot of people. And so the fact that Bitcoin doesn't do it uh, is interesting, but it poses some interesting questions about what that could mean for Bitcoin's future. But basically, Bitcoin forms a nice trend if you don't look at it in log linear, but if you look at it in log log. All right, and you see if we put it in log log, which means you're basically stretching the early years and you're compressing the later years, you have this really nice straight line relationship. The R squared is 96%. And essentially what it means is the growth is not continuous. So like in stocks, the growth is continuous, but it can be volatile. And with Bitcoin, yes, we have volatility compared to any other market because it's a new asset, but the volatility actually comes down, as many people have documented, not just myself, over the years, but also the growth rate has come down. So now we're about 40% growth, or growing every 2 years, doubling every 2 years, but that will stretch out the longer that Bitcoin keeps going. So a little bit slower growth every year. And I think that it's and this will also come into the 4 year discussion question, which we can go into that as well. Is the 4 year cycle on or off, or was it ever really a thing? But I think the fact that uh, the power law, by definition, if you were buying in 2011, 2012, like it wasn't just the function of Bitcoin being a small market and volatile. Yeah, that's true. But it's also part of the mathematical function of a power curve is that you have just stronger, faster growth at the beginning. And then as people start to understand it as a network, it mellows out.
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly. or pull the collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
I don't know how esoteric you want to try to get there, but we can talk about other systems like cities are a good example. They grow in power. And it's just a kind of an interesting way to map what happens with Bitcoin. And also other networks grow this way as well. Like a power law relationship is also, if you not over time, but just on two axes, it's like the 80-20 rule. 80 on the internet, 80% of the connections come from, it's probably more extreme, frankly, but you just say basically there's a huge amount of connections to a relatively small number of huge nodes, like Facebook, Amazon, whatever. And then there are, you know, uh, very small connections to a huge amount of websites like mine, which, don't make the top 100 ranking or whatever.
Mhm.
And that's that 80-20 relationship, that sort of inverse relationship. That's also a power law relationship. But the sort of the brass tacks of all of it is, I think that everyone was hoping that we would get this sort of cyclicality, certainly including myself, that would really handle, if you look at how we have this nice straight line here, and I have these quantile percentile regression. So every 10th percentile, basically, it's just pure math here. I'm not doing anything fancy. I'm not trying to decay the top lines like some analysts try to do. I'm just looking at where the math plays. And basically, you can see that after 2017, we never really had like a pure blow off. We did have this weird two top in 2021, and probably even the first top was the real top for other reasons, which we can get into. But basically, if you take off the 100th percentile, take off the 90th, I think that's where, and by definition, that means 80% of the time, relative to the power trend, that's what the price has done, basically. And that's sort of also a lot of people like to say that the power law is kind of like it represents the, like the floor, basically like a floor of where Bitcoin could go. And certain people draw different, a lot of people like to use the 5th percentile for that. In my view, it doesn't really matter with those things. But anyway, I have the 0th to the 80th percentile. And you can see it catches basically everything. And there are outliers. And I'll show you Bitcoin and gold to show you how they can really be outliers to the downside. But with Bitcoin dollar, which we're looking at here, you can see that the first time we really, there's nothing, this is not like a Elliott wave ABC correction. Sorry, I get on these tangents. You've stopped me, Tyler, but I like to explain this to people. So like when you look at regressions like this is the best way to sort of mathematically, scientifically see where you are with an asset or with money. You can do this with the money supply. It's really helpful. It really helps you sort of ground yourself into the trend because it's true. No one can graph like tomorrow. No one knows for sure what's going to happen to supply and demand, except for Trump, of course, when he's tweeting. But no one really knows where the markets are going to go on any given day or 2 weeks, 3 weeks, a month. But what we can see over time is that there is a general trend with all assets that, as long as they're somewhat sustainable in the market, they're going to go up and to the right, right? Here with Bitcoin, this is not like a rule that every single price has to stay within these bands that I'm drawing here and might sometimes go up to the 100th. It might never go up to the 100th ever again, frankly. And if that happens, then this will just stay there, and it will actually start to even curve a little bit this way as time goes on to try to account for that, increase in time and where the price really this is not a valid sort of 100th percentile. But nonetheless, it's happened. It's repeatable so far. So maybe it's something to imagine that's sort of fun that we can hit. And like right now, if we just assume Bitcoin can go anywhere from 0 to 100, just to give listeners, concrete numbers here. Actually, let me zoom into like today. All right, so here we are on the day of recording, a little under 80K. The 0th percentile is $68.7 thousand, so roughly say 70 grand. And the 100th percentile is 460 grand. And like I just said, I took off the 90th and the 100th. that's proven on this chart to be a little bit too rich for now. So I just take those off
Mhm.
normally now. But if you look at the 0th to the 80th percentile, again, so that we're looking at like 70 grand to 160,000. Then you can just take that out over time. Let's go to the end of the year, and those numbers become 85 to
Mm.
185,000. So basically, it's a good range. It's not but the important thing to understand is this is not like some trading view. Like I draw a channel and the price needs to either, bump up against there as sort of some resistance that eventually can overtake, or it's just support, things like that. This is just, it's mathematically drawing where the price has been relative to the power curve. And as you can see here in 2022, we dropped to new lows, right? So that
Yeah.
SBF scam bankman fraud puking there in November 2022, it was relative to the trend quite unexpected and usually had held.
Mm.
Because if you can look here in 2015, that whole crypto winter was called in the time, basically that bottoming around $200 held. Same thing as during COVID, or right at the start of COVID, and then even in the end of 2018, that held.
Mhm.
So you wouldn't, at the time, you wouldn't have seen that line as it's drawn now. It would have looked more like this at the time.
Mm.
But it's just the markets can become stretched. They can become people lose all hope at the time where they should have the most courage to buy. And yeah, so we can push it a little bit further. So I was curious how far we're going to push it in the fall and in the winter particularly, and it turns out that we've lined up pretty cleanly where we haven't
Yeah.
pushed it down. Yeah.
Why do you think we tagged that lower bound, or broke through it, if we were back a couple months? Like for me, like I round numbers are easy, and it's like going to 50K Bitcoin again just seemed completely off the table. That's a $1 trillion asset, and
Yeah.
with the rate at which the inflows are happening, with the ETFs, the rate at which Michael Saylor's buying Bitcoin, that persistent bid, like $1 trillion is just kind of laughable. If you can just kind of like model out where this thing could go. So that, for me, that was kind of like a mental floor. But sentiment was low back in February when we kind of puked out again. But like, what was it? Just like further distribution, you think, from OGs who have been selling? Was it the liquidations we had in October? Is there something that you can point to of why we kind of tagged that lower bound again, Matt?
I think it was sentiment, as you mentioned earlier, about the 4-year never quite leaving our minds. I think that fooled people a lot in the fall. I'm happy to report I was on here, at least not saying, okay, we're going to go to the moon, because a lot of people did think that, if you imagine just looking at here in up to October, you could still be pretty bullish and think like, oh, okay, well, we're going to have to go up to these higher levels that we've seen in prior trends. And
Mm.
keep in mind, if you're listening to this show, you're unlike probably 97, 98% of the people in the world, right, that you're following Bitcoin. And if you're actually listening to me, you're maybe unlike 99% of the Bitcoiners, because I still think 99% of the Bitcoiners don't understand what the power law actually means in practice. So, but the fact that, to me, I actually was scared by about November, because we were starting to break down,
Mm.
and I was thinking about the 4-year, just purely the 4-year, just the Schelling point of, and a lot of people disagree with me on this, but look, in any industry, when you take away 50% of your revenue in a day, it's going to come as sort of a shock. Now, a lot of people try to say, okay, well, there's still, and myself included, I can give other charts to show you that might, show that, okay, this 4-year is over or whatever. But at the end of the day, even though there's so much more Bitcoin like trading happening in ETFs or in Bitcoin treasuries or on exchanges, there's just a lot more flows than happens into, miners' wallets themselves. I
Mm.
understand that. Nonetheless, still at this point in time in the Bitcoin world, I think the 4-year narrative is strong, and the 4-year cycle is just kind of a Schelling point. So that would be my explanation of again, why we could not get past it in the fall, and then we had to just break down in the winter. What we've done differently, though, and here's where I'm fully ready to be open for a change, because I think the numbers will start, especially on this chart, which is, in my opinion, like the strongest chart. Like price is always the strongest thing you can look at. But as we've held this zeroth, the bottom trend line, which again, this is not like a trading view. It doesn't mean that if we go below it, it's like it's over. It just means we're going to stretch it out a little bit, the probabilities of
Hmm.
things that can happen.
Hmm.
But as we've held that line relatively in the fall, just to zoom right in, right? So, we hit it a few times, like 73, 64. Wait, sorry, it wasn't 73 at that time. 63.5, 64.1, 66.2. Okay, like we hit it a few times. All right, so this sort of low to mid 60s, and then you see, based on the beauty of this chart, right, the power law increases over $100 a day, like the actual trend line. So the fact that we're going back up, it's already now nearly mid 2026, and if you look at prior cycles, all right, we'd be heading down, right? Back in 2022, we're at the trend line going down. No good things in sight, and Celsius about to blow up, and just hilarious memes happening with Terra Luna and everything else. So uh sad memes, of course, as well, with depending on how you look at it. But if you're
Hmm.
in Bitcoin, you're feeling okay. So the point is, that's every prior cycle, which has been a 4-year cycle. We're only starting to go down now. And the fact that we completely had the fake out, didn't have the blow off top, then had the puke down, to me says it's probably sort of like the last gasps of the old way, where it's like, okay, we didn't have any Wall Street money, we didn't have any Michael Saylors coming in and buying just loads of Bitcoin every week, and we have now a world that's certainly different, but we still have these trend lines, we still have this base level to look at. I think it's looking quite good, actually, for the future, and I would say if by the end of this year, we finish at look at the Q0 there, okay, which is the bottom line, the Q0 percentile. It's like 86,000. That already is at the level that we started the year, right? So that's a
Hmm.
totally different thing than any of the prior cycles, right? Like 2017 finished at 20K. We finished 2018 at 3K or whatever, roughly, right?
Yeah. Yeah.
2021, the same, 60K down to 15K. So the fact that now we could just break even during that fifth year, so to speak, or the start of the next 4-year cycle, I think is all positive. And it probably shows that Bitcoin's ready to start doing different things. Although I would still say, I just think that the 4-year is a Schelling point. Like, it's going to be a story, right? In a couple of years,
Yeah.
when we have again, and new people come into Bitcoin, people try to understand how Bitcoin works, how it's different than gold, how it can be so weird and have value as a digital currency. Like, this is just, we're still on the bleeding edge of so much of that stuff that I wouldn't still throw out the 4-year completely, but actually what I see just based on the raw trends are, we're starting to face serious bounds about what that could mean. And that's a good thing, because at this point, I think we could break even or even be well up. And if we're well up, on that start of the next year cycle, this is the year that could actually break the 4-year cycle. It did not break last year. It held, but
Right.
we could break it this year. So that's my long-winded answer of how I think it worked out, why I think it worked out, and where I think we're going.
Yeah, makes a lot of sense. And yeah, it will be. I'll be keen to watch this year. Yeah, does this last year of the cycle or the first year of the new cycle look a lot different than the prior ones? Because I think I've talked to derivatives traders both on and off the show who are just like, yeah, 4-year cycle, bro. Like, obviously, and they were right. Maybe they helped. Maybe they were catalysts, that helped kind of
They were saying that
move this.
that it was still on.
Yeah,
That's a
you
narrative.
know, and
It's a narrative.
and
Yeah.
and it's they were with you, like, as soon as they saw, like, that trend, late October, November, it was like, "Okay, risk off, so to speak, in Bitcoin," or, "It's time to go cash heavier," or look at derivative strategies that are more bearish, and It's kind of like, yeah, self-fulfilling. And I guess I got a question for you. With the persistent bid, you mentioned Michael Saylor's out there every week, pretty much buying. Of course, he talked about recently how they're posturing, willing to sell some Bitcoin. I think that's more of like a little tactical edge against shorts, but
Mm.
people will do take comments how they will, but obviously Michael Saylor is taking a bunch of Bitcoin off the market and throwing it into multi-sig custody, and it's not coming back. It's not ever coming back, at least in the foreseeable future. If strategy can keep this up and doesn't get massively stressed in some way that maybe I can't foresee. I think that that Bitcoin's just not coming back to market anytime soon. um, I, I kind of think of it as like a coiling spring, right? It's like we're gonna hit an inflection point where there's just not enough free floating Bitcoin out there on exchanges, and when demand comes in elsewhere, um, maybe it's the ETFs, maybe it's other institutions, maybe we do get another retail wave. It seems like the retail led cycles are over, but you never know. Like things can change. The economy can shut down. The government can write checks to everybody, and those things are always so hard to predict, like what happened in COVID. But I guess how much does the halving matter coming up? I think it could be really big. Like I think the supply shock could be really impactful. People always say, "Oh, the halving matters less and less," and over long time frames, that's certainly true. But how do you view the halving um, as impactful for the coming years, Matthew?
Yeah, I could touch on a few points there. So regarding the halving, I started to touch on it as well in my prior answer, but I I understand the arguments that it's obviously if there's less and less coins to sort of change the output of this, the structure of the system, the supply curve of the system, it's going to be less and less important. I can get behind that argument. But like I said, and you actually affirmed it to me with your comment about the derivatives traders, and there's also even more ways to protect yourself against these narratives, or to even, let's say, push the narratives. All right, with the off-chain ways to trade Bitcoin now. So I still think that it's pretty important. I think that it's a unique thing, right? I mean, everything about Bitcoin is unique. The difficulty adjustment is unique. The fact that we can keep, you know, just shooting out these coins every 10 minutes and people can yell and yell, but these blocks keep getting produced is really, really unique. It's really amazing. I often think about it, like not to get too philosophical, but I think we're at a very interesting period where there's volatility geopolitically. We're going through a reset, a realignment politically, geopolitically. Um, Also, it's about, you know, every 80 to 100 years through at least recent history, specifically in Europe, we've had major realignments. Seems like that's matching up as well. But we have this asset now for the first time ever that you can actually sort of withdraw to your own castle for some safety. And we've never had that before. The
Hmm.
last time it happened, I know I'm getting on another tangent, but it's relevant.
Go for it.
So
Tangents are great.
yeah, the last time that happened with gold, all the gold ended up in the United States. I tell people all the time,
Hmm.
one of my favorite books, it's a book called Chasing Gold by a guy named George Tabor, who was actually like a wine connoisseur in Europe, but he went into the archives and and read up a lot about how the different gold flows were happening when during World War II. And so it wasn't, as a lot of the gold bugs like to say, it wasn't Roosevelt that had the final nail in the coffin of the old gold, international gold system, even though he did a lot, to devalue gold from 1/20th of an ounce to 1/35th of an ounce,
Hmm.
would be the dollar. It was actually the tyrannical governments of Hitler and Stalin. There's a famous story of Poland, like their gold had to go all the way across Europe, like through the Black Sea, down through Lebanon, around through the Mediterranean to get out eventually into the United States. And by the first year of World War II, about 80% of the world's central bank gold had made it into the United States' coffers. That in itself was kind of like, okay, we got the people's gold away from the dictators, but it also just set up the dollar hegemony, which in itself didn't even last long, right? I mean, Bretton Woods
Hmm.
itself only lasted, less than 30 years. Uh, 27 years or so, from 44 to 1971. So this stuff can change quickly. History gets rewritten every day. And I think that Bitcoin is just prime to be a part of the new global financial system. It's going to be bumpy, though. Like a lot of people said Trump was going to be good for Bitcoin. I think he's quite bad for Bitcoin, not to be political, but it's just obvious. Like when you're grifting shitcoins like the day before you become inaugurated, like people can't understand the difference between like crypto and Bitcoin, right? So the story is going to play out over many years, probably over the next decade for sure, I believe.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market leading rates at every size. You can learn more at archlending.com.
But the halving is going to be, here's where I wanted to tie it back. The halving will be a part of that because it's just part of the system. People are going to have to learn about the system, understand it. The more valuable Bitcoins become, the more quote unquote of a black swan event this could be. Even though it's not a black swan, people could see it coming. But it's just still, it is a very important thing. And I hear what you're saying. Like a lot of people, for many reasons, they like to say that, okay, there's just this little stash of minor coins that come out and the rest is, sort of institutional flows or Bitcoin treasury flows, like we were saying. But it's a big narrative in what Bitcoin does. And I can absolutely see that continuing to kind of sort of guide these 4-year cycles. Giovanni, who also but observed the power law, actually a couple months before I did, he talks about how there's something around the number 4, basically, where that is endemic to the system, that it's sort of basically it floats around, sort of resetting around the power law every 4 years, but even with a little bit more complicated harmonics, as it's called, which I haven't completely studied yet. But basically, if you look at this chart, he puts a lot of faith into this 2011 top as well, which is possible. I haven't. There's when you start drawing like curves. So the thing I like about the power law, again, another tangent, is that we can see directionally where it's going. We know the 4-year cycles. That's like a kind of a simple way to look at it. But when people start telling me that they know exactly where it's going to be next month, next year, that's where I get very suspicious. I think Giovanni's model is quite interesting. And by the way, what he's showing is that there could be a big explosion in 2027, which again would explode the narrative of 4-year, because that's, that hasn't really happened. But it does have this weird sort of, there's this, I don't know, you'd have to talk to him about it, but it's, I haven't fully digested it, but there are different harmonics basically between 2 and 4 years. And he thinks that could happen in 2027. We'll see. But I don't try to take it that far with Bitcoin. I just say, look, these are the bands. These are the relative levels of risk. And there's a lot of narratives out there. There's a lot of people playing games. Where we are right now, and never financial advice, right? But where we are right now, relative to this thing called the power trend, which is how cities grow, networks grow. It's a very it's even a more sustainable trend than like what the stock market goes through or the gold market goes through, because that can explode. Exponential trends can explode a lot, and it takes a long time to reset from. The power law is it's a more sustainable trend. And if you look at the bands or the gradations of risk, we're at the low end. I mean,
Yeah.
literally by definition, relative, if you accept that Bitcoin is on a power curve, then 90% of the observations that we have seen are higher than we are at relative levels. So relative levels, we are extremely cheap. And so that's a great opportunity. If you don't have money, you could sell puts, or if you do have some money or you do have some Bitcoin as well, you can lever and buy more. There's a lot of things you could do. Never financial advice, right? But or you can just buy. Often just buying and hodling is the best advice.
Yeah.
So it's a great time to do that, as far as what I can see. But that you can really find comfort in that if you just sort of forget all the noise, all the trading view, the YouTube thumbnails, and you just look at this chart and try to understand what it means.
You touched on kind of, a lot of people expecting Trump to be um, good for Bitcoin. And I think there were some interesting, I guess, regulatory moves, both from Congress and kind of, at the SEC, at the CFTC, that kind of we're an attempt to put an end to regulation by enforcement by the US government that I think were good for Bitcoin. And it was largely crypto driven, right? I don't think it was singularly focused on Bitcoin, but the whole industry. And I think those were good things that materialized. Like you said, Trump going out before the inauguration and launching a meme coin, um, now turns like half of the voting base in America completely off to anything crypto, which Bitcoin sadly falls under, right?
Yeah.
We know that too well, that the narratives are tied. What does adoption look like for you? Obviously, I'm at bitcointreasuries.net, and we're covering a lot of these big firms are coming in. You've got your Charles Schwab's, offering forms of spot Bitcoin now that they're just rolling out. You have BlackRock and Fidelities and Morgan Stanley now rolling out big ETF products, with really low prices on them. They've got client side demand, and they realize that if they can make a few bucks off something, they're going to get into it. I don't know how well some of these firms understand Bitcoin. I do know there are people at some of these firms who get it, but those institutions move more slowly. So I guess when we think about adoption, like I said earlier, I think the retail driven markets could largely be over, and I think retail has moved to these other products like the ETF wrappers. They've moved to um, getting Bitcoin treasury exposure, whether directly or indirectly through index funds and all that. But what do you think the next wave of adoption is? Is it still too early for the sovereign level adoption? We've had a little bit of that. With like El Salvador, and I think it's Bhutan who mines some Bitcoin. But like to me, that seems a ways off before G7 starts really buying Bitcoin or something. How do you view adoption? Like again, predictions are tough, Matthew, but what leads Bitcoin through this next cycle? I would say.
So, a couple big picture things that I'm looking at there. Firstly, there's only so much you can do. So I don't track this stuff as much as you guys are doing so wonderfully over at Bitcoin Treasuries. But I don't even like the total. The total right now, it's like 3.5, even 4 million. It's a total of, you look at the governments, corporates, um,
Mhm.
Saylor himself, ETFs. Is it 3.5, 4 million Bitcoin roughly?
Yeah.
Right. So, and it's
Yep.
just growing every day on the margin. Uh, if you think about that number, which is this huge number, right? And you think about all the companies in the world that are doing that with gold or with silver, right? I think it becomes quite clear where the real value lies. And you think about the fact that it's not even Bitcoin companies that are doing this. And it's true. Look, I know this is a whole narrative you've probably dealt with a lot in the space where it's like, okay, there's just some idiots coming in with some company. And it's analogous. It's kind of analogous to Bird becoming an AI company and then exploding in valuation overnight, right? Like, it's this idea out there that just getting into Bitcoin treasury, like establishing a Bitcoin treasury, just means you're LARPing on the market that you don't understand and you're going to get out of quickly when the price crashes. There is some of that, and I'm sure you've seen
Mhm.
it, and
Sure.
probably a lot of that unloaded and it blew up in the fall. I wasn't even particularly paying attention. In fact, well, a couple stories, I'm sure, in the Bitcoin space, even established players, I guess. But anyway, having said that, all of that to me is marginal. The big picture, like the big picture of this let's just round up to 4 million Bitcoins is there's no gold companies that do that. People like in the gold industry, they mine the gold to sell it.
Mhm.
It's not
Mhm.
only a part of their cost, right? The final gold price that you see on the market is not only part and parcel of a miner's cost over time, but it's a part of their profit. And it's, if that number isn't high enough, gold does not get mined. It's a really important point. Like, if that number is not high enough, gold will not get mined. And so you can have these huge drawdowns in the gold industry. You can have cyclical changes in whether governments hold or not. And by the way, we're in a positive bull since 2008 for governments holding. So that's one thing. Governments are a huge
Mm.
holder of gold. I can show you a chart of that. But just generally speaking, with gold versus Bitcoin or silver, which is a distant second to gold and precious metal holdings, there's just no, other than some tradition in, dowries in China and India and stuff, it's not like people buy it for the reasons that they're buying it with Bitcoin. For Bitcoin, people see that it's a major long-term value driver for a personal family balance sheet or for a corporate balance sheet, which is just, it's amazing.
Mm.
So that'd be my first sort of point that I would make. As to your sort of more specific question about what could happen with the next uh, level of adoption, I'm not sure. Perhaps it's just more marginal things this cycle. But what I will show you is, uh, just to cut to the chase, if you look at let me show. If you look at this, so this is the base money. This is one of the things I've been tracking for a long time. So I got a lot of trend lines on here as well, the bands. But if you look at base money, it's been about 30 trillion at the height of COVID, end of 2021, start of 2022. Now it's down to about 26 trillion. If we project out, all right, so here, after my long-winded narratives about exponential versus power, this is an exponential curve. This is what anything looks like in the financial markets. It's how money supplies
Mhm.
grow. We have just a straight line on log linear. Okay. Grows at about 10.2, 10.3% per year, depending on your starting date. I'm showing 10.3 here, 99% starting in 1971. And if you go out until 2040, we see that the OLS there is 149 trillion, 149 trillion. On the low end, you could be 90 to 100 trillion. On the high end, 200 trillion. Bitcoin's market cap around this time will be the same, a little bit less, based on the power curve. So that to me is like the very exciting thing. And I don't know exactly how it's going to play out, but I think that's where all the fireworks are going to be, because I am sure, as far as adoption goes, or, major holders of Bitcoin, they will be involved at this point. Whether it happens by the end of the decade, whether it happens in the start of the 2030s, it's going to happen there at some point. For sure, it's going to happen by the end of the 2030s. But that, I think, is where you're going to see Bitcoin is a major component of treasuries of nations and perhaps even central banks of nations' balance sheets, because they're going to realize that in order to keep confidence in their currency, they're going to have a harder asset, harder than gold. And so I think uh, that's where, and once you have nation states, really buying Bitcoin, then that will further drive adoption and price happiness, let's say. Although, again, like I said, that's always incremental. I don't know exactly when that's going to occur. And I think a lot
Oh,
of it is still going to be cyclical. But yeah, that's my overall time frame of when something like really huge it's going to be, and I know it's a long one, but I would say in
Mm.
the next 10 to 15 years, that's when you're really going to see the nation state adoption have to come on.
I I really hope Peter shifts around to see it.
Yeah, I agree.
He's gonna melt down. You know, yeah. So? You did talk about like the geopolitics of, you know, the U.S. dollar hegemony possibly coming to an end. You know, if history kind of repeats itself on these larger 80-year plus cycles. I guess we did see Iran kind of, say that they'd accept tolls or tribute in Bitcoin as a way to, end around, the dollar system. But, largely we haven't seen, as far as we know, these like BRICS nations realize that Bitcoin is something that they could use because it is a neutral money. Is it because Bitcoin's network is still just too small and we need to get closer to that, monetary base for governments to really have confidence that it's like, oh, this is the game theory just works out that we need to not be the last ones into the Bitcoin network.
Yes, I think it's that, but it's also, uh, let me be more precise in what I was saying before. I don't know exactly what's going to happen here. One of the scenarios that I was kind of throwing out was Bitcoin could be a core component of an asset of a government or a balance sheet. You go back, 80 years when Poland and many of the European countries, I mean, France itself, the strongest allied nation, had to withdraw their gold from Europe. We're in this realignment right now, so they're going to have to figure out a way to shore up their budgets. What one thing I'm fairly confident will not happen is a total collapse of the dollar. It's not something that I would, first of all, would want to happen, but I'm trying to also say,
Mm.
based on like what I see with the data and things, it's not like, Saylor talks about this a lot. It's kind of, in some extent, this is sort of the Saylor world. He talks about, where you're gonna have this dollar, so you're gonna have the dollar going around as like sort of this Gresham's law. You trade that, but you're gonna, hodl and hoard the Bitcoin. It's kind of like that. But also, even if we get to a pure Bitcoin system where people are starting to denominate in Satoshis and stuff, which I don't see out as happening for decades and decades, the system now is just so dominated in dollars. I do think even if the U.S. screws up their foreign policy for the next 10 years, it's such a it's so far in first place. It's hard to show it. Like, here's a chart I can show. So this is government debt versus GDP per capita. Now, most reserves, so that monetary base that I showed you, which is 26 trillion, that includes like all the currencies in the world. It's kind of balanced. Okay, you have the yuan, the yen, everything. This chart right here. Okay, this green line. But that's the liability of central bank's balance sheet. At least 60% of this number is in dollar treasuries. All right, it would be the foreign holdings of U.S. treasuries, and plus you have investors, you have international investors, not just foreign governments. So let me just show you. This is log linear, just debt to GDP per capita. It looks somewhat balanced. You can see most countries are actually have very little debt and very little GDP per capita, which is just an interesting thing to see how far we are as sort of humanity. The United States is up here. We got Switzerland here, Singapore, Norway. Now, but this is log linear. If I take the log off, here's the United States. Just keep in mind this dot, and then let's look at the rest of the world once I take log off. See that? It is at first by a mile. So even though people like to say the dollar is crashing in this, and again, I'm not saying the whole dollars. I'm not saying the dollar is like the best asset or whatever, but and also I do think that foreign policy, the U.S. is doing as much as they can to throw away trust that has been built up over 80 years. So that's another thing.
Mm.
I'm not trying to cheerlead the dollar, or certainly the Trump admin, but there is a structural setup in place around the world. Euro dollars as well is a huge component of uh, banks and international financial companies around the world have dollar deposits and then don't have any relationship with the Federal Reserve. It comes back to here, comes back to the the faith in credit in the US dollar. And it's just enormous. It's just enormous compared to anything else. Now, there is one important caveat. China is not on here. It's a World Bank doesn't have, I don't know why. China would be somewhere here. China's like 15 to 18 trillion, although they're not very transparent even with that. So it'd be like somewhere here, and their GDP per capita is very low, like
Sure.
15. So it'd be like somewhere here in this quadrant. But then you'd have to ask yourself, okay, so if the dollar fails, are people going to hold Chinese yuan, right? That argument has been talked about a lot, and I don't see that happening at all, no matter what Xi does or what any foreign policy relationship with China
I mean, if I'm a
is.
betting man, I think the yuan collapses before the dollar, right?
Right, right.
Yeah.
So anyway, you look at this chart, the dollar is still, it's the best looking horse in the glue factory, all right? That's just what it is. And it's going to take time. It's going to take time structurally for companies around the world, banks, balance sheets, treasuries, right, to reset into Bitcoin. But I think it's a great analysis to do what you guys are doing at Bitcoin treasuries, because that is where it's going to happen. Like I said, gold miners are not keeping the gold on their books. They're selling it as fast as they can to cover their costs, and that's just not the case for Bitcoin miners and non-miners alike, people that are companies, entities that want to interact in the Bitcoin system. So it's going to take time. I don't think the dollar is going to collapse, but I do think as this fiat monetary base, which this is the thing that is most analogous to the supply of Bitcoins in the fiat world, is central bank money. And it's still going to grow. They're going to print a lot. Yields are rising, so they're going to have to get them down. They're going to print. You can see at the low end here of the
Yeah.
trend, because we've come back down from COVID, 30 trillion. So it's going to go up. And somewhere by the mid-decade, all right, so mid-decade of the 2030s, you could see that that's like 90 trillion at this point, 150 by the end of the decade. There's just going to, and it could come even sooner. Whether it's just slowly and then suddenly, I just am not sure, but you're going to see more and more entities hold just a little bit of Bitcoin on the balance sheet. Maybe it starts out with 1%, 2%, 5%, until it's a meaningful portion. And then even then, people are going to realize that it's the absolute most pristine asset to hold. And you're just going to continue to eat up the world there and take more and more of the share. But I see it as more of a gradual process. I don't see it as a sort of a hyper Bitcoinization. This is going to happen next week. And
Right.
so far, the
Yeah.
power law has borne that out quite well.
Yep. Yep. And other bullish signals to me are when I hear people talk about the debasement trade more and more, like in common parlance. It's like I think everybody's getting it, and maybe it's going to take a little bit of a generational wealth transfer before we're to the point where it's like everybody just understands the debasement trade who has any capital, and Bitcoin is an obvious winner of people exploiting that and piling into a hard asset. Talking Bitcoin treasuries, what's been your take on Michael Saylor's persistent buying every week? His STRC product that pays the monthly dividends that he rolled out last summer is now a $10 billion plus dollar notional instrument. The last 3 months, he's raised billions of dollars in just a couple of trading days before the ex-dividend date. The company's moving to twice monthly dividends coming up, which I think is something that's really interesting. We have another Bitcoin treasury company, Strive, that's going to do daily trading
Yeah.
day dividends, which is a first in markets. No one else does twice a month, and Strategy was innovating there. And you got Strive, who's going to be doing it daily. I think it's just going to bring so much attention to these derivative instruments of Bitcoin, these accumulators of Bitcoin, and I think that's going to unlock some more capital. What's been your take on just like how Saylor's been able to raise money, even though Bitcoin's price has gone down 50%? Is that surprising?
Again, just to give sort of a big picture answer, because I don't think about it too much, even day to day, month to month. But if Saylor is able to pay in perpetuity 10%, with his sort of the morphing of the converts and other instruments from the early days and when he started buying in 2020 to now. Generally, if we just think that he has a 10% or 11% liability every month or twice a month to pay, right? APR. So Bitcoin is growing at 40% per year. I'll show you. This is a presentation. I made it cheat code, but it goes down. All right. So this is the nature of the power law is it goes down every year. So it's actually a more sustainable way to grow. This is what TradFi does. And it's actually, if you could graph the percentage, right, of the way things grow, it's just a straight line, right? So 10% return, 20%, whatever. But what's happening in the world today, especially because of technology and we also have inflation, it's true, but also we have technology which allows efficiencies, it allows for things to grow faster. And we're seeing the stock market grow faster as well. So, when I was 20 years ago when I was school, people were talking about making, 7%, 9% or something as an amazing equity return. Now, on a trend, the S&P is doing 13% plus 2% dividends. So you got to be getting 15% to really break even, and plus, and we have inflation, right? But what's happening is, we have in this, as Jeffrey West, who's really good in this space, and he has a really good book. It's called Scale. I recommend if you want to learn more about power laws and exponential laws. But he has what he calls super exponential growth, which I analogize to TradFi here. Is basically, over the last few hundred years with the dollar at the center, we've had to grow faster and faster. The money supply is growing faster, inflation's growing faster, and also technology is growing faster, which negates some of that growth. But on net, we still go faster with the stock market and everything. So at some point, this is another interesting question, and I'm curious how it's going to play out. People that take this strategy, and Saylor's got plenty of time for this, but people that take this strategy, they're going to run into lower growth rates for Bitcoin. All right. But back in the day, Bitcoin would give you 100, 200% CAGR. Now it only gives you 40. That's why you can get this effect of this sort of straight line on log. But if you look at log linear, you see that it just mellows out. The slope is going, the growth rates are going down. They're still huge numbers, right? Don't get disappointed, right? 500K projected by the end of 2030. Okay. 530K. I'll just show you here just so you can see it. 536K. I think it could even go up, go back to like 600K, but that's another discussion. In any event, what Saylor's going to go up against, and I think a lot of these people that are going to plan this is my sort of representation of exponential growth, super exponential growth that I showed in Bedford at Peter's conference. This is averaging a few different things in the world. It actually makes it quite a bit lower, only about 8% now. I think we're really, if you look at the stock market, like 13% at least you got to do. But let's say we even jump to 20%. And so like if you're in the stock market or if you're doing something like Saylor, where you're acquiring Bitcoin at interest, you're going to have to start paying maybe even a little bit more. And what's going to happen is Bitcoin's price is going to go down. So there's going to be like a cross here. This is where it's not only on your debt service, like your interest payments, but also on the way things grow, like the stock market. That's a little bit of a tension. So I wonder how this will all play out. But basically, Bitcoin's growth is projected to go in 5 years down to about 30% CAGR. 2041 will be a 20% CAGR. And by 27, it'll be a 10% CAGR. 27 is too far off. And that's 10%. And Saylor's already paying 10% right now. So if Saylor can buy Bitcoin at 10% interest for another, 30, 45 years, he's doing quite well. The market's not going to allow that. He's actually going to have to start paying even more, I think, more interest. But also Bitcoin's growth is going down. The system's maturing. People actually think that maybe we'll have less interest at some point. Maybe. But I think actually with the way that the markets are going, Apple itself has been on a 25% CAGR for 15 years, just holding Apple, right? Yeah, you got your volatility. You got plenty of volatility there, but that's what it does. Again, I'm just trying to provide context. In the next 5 to 10 years, we're going to be around these levels of a 20 to 30% growth in the stock market, I think. In a lot more stocks, they're going to start to grow faster. I mean, we're already seeing it with AI, right? And that's going to compete against Bitcoin, which is interestingly not growing at this stable rate. It's not growing at, and when I say stable, I mean fixed, constant,
Right.
exponential growth like this,
Right.
which is actually increasing. So this is my scenario, is basically, is two things. I think either Bitcoin can turn the world into this sort of power law relationship, which the financial world has never seen before, or the world turns Bitcoin exponential. This is very much the Saylor world. All right.
Mm.
So in the Saylor world, growth rates are still constant, or they even increase. You can pay 10% and Bitcoin can give you 20%. Saylor's even said in presentations, he thinks that the growth rate of Bitcoin is going to settle around 21%. Now, that's like the most absurd thing to possibly say. Like, there's no way he knows this, and is obviously
It's a
just
meme.
using it. He's
Yeah.
using it, the cheekiest number he could think of in the Bitcoin space, that it's going to say. Like, how convenient for you that you can buy Bitcoin at 10% and Bitcoin's just going to grow every year at 21%. That's amazing. So good for him to put out these memes. The bottom line is Bitcoin, according to the power law, decreases. And like I said here, it's going to hit 20% in 2041. It's not going to stick around at 21%. Although if Saylor has his way and we start to get into this world that no Bitcoiner wants to see, which is, say, you can't withdraw your coins, or you can only buy KYC, debt contracts continue at fiat interest, sort of ever expanding levels of fiat interest, then this is the world that we will actually see. And to be clear, it's fine to hold Bitcoin there. It's fine to hold it. But if you're interacting with the TradFi system and you're extremely gate kept, that is not the world that's not the cypherpunk world.
Right.
So you could still do fine there, but that's not the good world. And I would paint that's sort of the Saylor world, and it's hard to call, frankly, because that's it is true that governments want to control their currencies. They want capital controls for thee, not for me. They want control, and we're going to basically be fighting, in my view, this Bitcoin world where actually the power curve continues to win, and you continue to grow at this nice level, stable, sustainable rate. But the catch here is that you actually have trouble paying fixed interest. This is kind of the hard difficult thing to think about, because fixed interest is TradFi. It's like, I'm trying to get 10%, right? I'm trying to get, or I got a loan, it pays 5% fixed, or maybe if it floats, it might go up to, and it's true in the U.S. Interest rates were up to 20% in 1980. That's true, but they don't go to 200% or 300%. That's not how debt works. Growth rates stay around. Historically, they've been about 5 to 6%. There's been huge variations, but that's where they've been. There will come a time where Bitcoin's going to have to compete with that. That is, the actual growth in the other currencies' terms will become about that rate of interest. And whether that happens at 10%, I think it's going to happen even higher, like 15%, 20%. People are going to have to sort of think about this and say, okay, are we going to, everybody's at that point is going to know Bitcoin is the hardest money, the soundest money. It grows very stably. It's predictable. All the rest. Are we going to accept that we would rather hold Bitcoin on a balance sheet, denominate things in Bitcoin? And actually, in this world, it's very difficult to do long-term loan contracts, because your Satoshi is actually staying more valuable than you could ever hope to get it back at interest. Or are you going to still be in this world of, ever expanding fiat units, collateralized, paid back at fiat interest? It's the world that we all know, that we're very familiar with. How's that world going to work? And that's
Right.
to me the big question. And I think we're probably about 10 years away from it.
Yeah.
Like I said, to me, it all lines up somewhere around 2035, 2040. And I don't have a great answer yet, but this is kind of like what I'm playing with in my head as a
Yeah. I
thesis of
mean,
how
I,
this could
I
work.
mean, the cypherpunks will be really disappointed, and count myself in that camp, right? If the world does turn Bitcoin exponential, you bring you made me think of a couple questions. I think Saylor's argument is that Bitcoin scarcity and its value proposition will make his cost of capital trend towards the so-called risk-free rate with Stretch, where he does have that variable component on it. So I think his argument is that he's going to accumulate so much Bitcoin, his balance sheet is going to be so robust that he's going to be able to drop. He's going to trend towards the risk-free rate, and that spread between what assets are growing at and what people consider low cost borrowing, he's going to be uh, nearer that level, certainly than today. Which I'm definitely open to that argument. Maybe he gets such a big balance sheet that he can do other creative things, through M&A and actually roll out some other sort of operating business or bank like business. And then I guess on the other side of that, when I'm thinking about what you're saying philosophically about the world turning Bitcoin exponential, is there a risk that institutions like strategy, like the ETFs, like sovereigns accumulate and centralize so much of the Bitcoins that their economic nodes have so much power that they can fork people off basically from the Bitcoin network? Regular OG Bitcoin could still exist, but if the economic actors don't embrace it and say you're either bringing your coins into centralized custody or your Bitcoin market is going to tank. Like, is that a real risk? Is that the biggest risk we have in Bitcoin long term, Matthew?
Uh, it's a big question. I think it is yeah. And there's no easy answer there. That no one knows for sure. We talk about mining centralization used to be the big thing 10 years ago. Still kind of a thing, and you see mining power sometimes is going to AI now, and
Mhm.
there's all sorts of things year by year, decade by decade, new challenges that come up, and how many bitcoins will pose a risk to centralization, right? Uh, if we just purely look at that, let's say 4 million in Bitcoin treasuries, including governments, then by definition, uh, that's not even close to half. But
Right.
then, of course, you got to count for lost coins and frozen coins and Satoshi's coins, perhaps. So there are many ways to slice that and think about that. But I do think that those questions that you pose will come up more and more. Like that will be part of the debate. Uh, Another example, quantum, right? Uh, I'm not saying this is not a risk. I think it is a risk, but I saw some proposals by Nick Carter, who I believe it might even have some VC money in figuring out quantum safe cryptography
Hmm.
solutions. But
Yes.
in any event, he made some comments that like Wall Street, for lack of better words, might fire the core developers. And if you get already into that discussion, that language already right now, and how much he's doing that for I don't know, marketing reasons versus general altruism towards Bitcoin versus just selfish altruism, talking about the market, keeping the market cap alive, whatever. I
Hmm.
immediately jumped to the how bad it could get at other parts of the world. I know Bitcoiners don't like to talk about politics, but here we're on the eastern front of the European Union here in the Baltics. Ukraine has been at war for over 4 years, and Russia, who everyone thought was a big evil strong power, can't get a few kilometers in the forest in Ukraine. Doesn't mean they're any less dangerous, but now Ukraine is totally obliterating Russia's defenses, and Russia has turned off the internet. All right, you don't actually see it because a lot of the trolls now are completely blocked on Twitter or whatever, and those that you do are on proxies. But the internet has been turned off. It's like gone in stages. Sometimes it's been back on, but like mobile internet's been completely turned off in Moscow, St. Petersburg. All the Western apps are completely blocked in Russia, and some have been blocked for years, like Facebook since 2020 or 2022, since the full scale. Um, like censorship is a real thing. It's a real thing. It happens in real parts of the world. It happens to real people by real governments. It's not a made up thing. So to me, those are the larger questions. And I'm not saying I have an answer, but I do see the dangers in that. And the most dangerous censorship always comes from the government. And ironically, I'm not like a lot of these probably Western Bitcoiners who think like it's all the U.S. government, all that. I think the worst actors are in China and in Russia. But that doesn't mean I'm saying the U.S. is good. And you've heard I've given plenty of negative comments about the Trump admin. But so you got to just take all that into account. You got to look at all that whole picture. Governments are censoring speech every day. They're trying to control more Bitcoin every day. There is bad legislation. Maybe there's good legislation. But at the end of the day, yeah, if sort of we let ourselves be taken into this web of KYC, AML, and the real economy only trades on these legacy platforms, then that's very bad news. I think we're going to get there. I think there's plenty of opportunity around the world. People want, especially people in the developing world, or the global South, as it's called. They want what we in the West have had for decades. They're not going to stop. Bitcoin's the best way to do that. It's going to be in stages, maybe even dollar stable coins, which is going to help the dollar paradoxically for a little bit. Will help them do that too. But Bitcoin for sure is going to help them do that. So I'm hopeful. I'm optimistic. But I would say, yeah, if you think through those examples, you think about the way that these like really deep questions about censorship go. Bitcoin has never really had to fight with any of that.
Mhm.
It's always been, the arguments have been very public. They've been on Bitcoin Talk, Twitter. Yeah, there's some backroom chats, perhaps, with some developers that are made public and scandalous or whatever. But at the end of the day, the software is what it is. People choose to run it. And so I'm very hopeful that we stay away from this world where, I don't know, Bitcoin is destined for just a 21% CAGR and you got to pay 10% if you want to if you want to stay in the fiat world. I don't know, that's a little bit too cute. It's difficult to project how it'll all shake out, but on the macro picture, I can tell you we're careening towards like harmonizing with the values that happen in the fiat world. Not next year, not the year after that, but probably in 10 years. 10 years is when it's really the fireworks are gonna start.
It's going to be fun to have a front row seat and see how it unfolds. I love that you're optimistic, Matthew. I hope we're not headed towards, 1984 levels of, different enclaves of censorship. And I think, Bitcoiners are going to be part of that vanguard, fighting against, I think, centralization and censorship, which, definitely censorship in the West, it pales in comparison to what you've got in Russia, compared to what you have to the dictatorships in the Middle East, compared to the censorship in China. And I hope Bitcoin and the ethos behind it, the ethos behind free market capitalism and censorship resistance, do continue. Thanks for taking the time for us today. Let everybody know where they can find your stuff, find your charts, follow you on Twitter, Matt.
Yeah, my pleasure, Tyler. One Base Money at One Base Money is my handle everywhere. YouTube, Twitter, etc. And porkopolis.io is the website. So you can find me there.
Great stuff. Awesome. It'll all be in the show notes. And see our viewers out. I have everybody say, stay orange.
Stay orange.
Thank you, ladies and gentlemen. Matthew Mezinskis.
Take care.